Good afternoon, everyone. My name is Alexis Maxwell. I'm an equity analyst with Bloomberg Intelligence, and I'm delighted to have Tim McLaughlin back up with us on stage. A couple of questions here as we transition into our next session. So, Tim, as a quick reminder, can you tell us what Invesco QQQ is?
Sure. Invesco QQQ is an ETF which tracks the NASDAQ 100 index. So the NASDAQ 100 index and by effect the QQQ are comprised of the largest 100 non-financial companies listed on the NASDAQ stock exchange. So we think the resulting exposure is something that gives you access in a single ticker solution to some of the largest and most innovative companies in the world. By way of AUM, or assets under management, QQQ at roughly 413, I think I saw last close, $413 billion, is the fifth largest ETF globally. It's also the second most actively traded ETF in the world. It boasts a 26-plus year track record, so it's one of the oldest ETFs on the street. And I think in a way it's kind of innovative in itself, based on just that long track record and really launching in the nascent stages of the ETF industry.
Thanks, Tim. With that track record, then, in today's rapidly changing economy, how are the holdings within QQQ adapting and evolving to keep pace with current trends?
So, we talk a lot about innovation in the context of Invesco QQQ. And one of the things that comes up is like, well, how do you quantify that? And how we like to quantify it at Invesco is through research and development, or R&D. And if you look at the weighted average spend from a research and development standpoint of a QQQ company versus something like the S&P 500, similar stack up, right? The weighted average spend from an R&D standpoint of those companies, what you see is a significantly higher spend for QQQ companies. So I think it's as of the end of last year, the average was $17.7 billion for a QQQ company versus roughly $12.7 for an S&P 500 company. So you have a 1.4x multiple above that of the S&P 500 if you look at it from an R&D standpoint, and that's pure dollar. But if the thing is, as the Qs have grown and as tech has obviously gone on a significant run in the past decade plus, what you see is a growing proportion of companies that are sitting within QQQ that are now represented within the S&P 500. So it's roughly 85 companies or so that are in both indexes. And if you were to strip out those companies, those 85 or so from the S&P 500, and look at the R&D of the S&P X Qs companies, what you see is that drops significantly, and that multiple jumps up dramatically. I think the R&D on the S&P 500 goes down to something like $1.4 billion as far as average spend. So we like to think of innovation again in the context of that R&D, and really just kind of it's ingrained. The commonality we see across Qs companies is the commitment to reinvest in themselves and really drive things forward. And you can't innovate, you can't stay ahead of the curve without investing. I think a lot of these companies we've seen have they look a lot different than they did, from even 5, 10, 20 years ago, right? Amazon being an example started off as an online book retailer, and now it's, a hyperscaler as far as the AI data center is concerned. Obviously with a huge retailing business as well, but these are companies that are nimble and have been able to diversify their core business segments.
Thank you. One last question then. When it comes to investing in emerging technologies, where is QQQ shining outside of the technology sector?
Yeah, so one of the biggest misconceptions we come across as far as QQQ is concerned is that it's a tech fund, right? If tech is up, Qs are up. And, there's definitely truth in that because it is tech heavy. If you look at an ICB classification standpoint, it's roughly 64% of the portfolio is within technology. If you look GICS, it's somewhere around 55. But you do have a significant portion of the portfolio that really falls outside of technology. And I think what we've seen in this day and age, right, is there's a lot of intersection across industry, right, where you have pure technology companies, but you have a lot of companies that are not pure technology companies that are really tech-centric in a lot of different ways. So we've worked with NASDAQ, our index provider, to provide some research around patent filings of the QQQ companies. And what we've seen across roughly 30 disruptive areas of technology is that you have significant representation of Q's companies over the last year filing patents in those areas. And you see the ones that are associated typically with AI, right? Natural language processing, big data, even cybersecurity. But what you do see is differentiated exposure in sectors like healthcare, right? So filings in robotic surgery, nanorobotics, bioinformatics. You also see things like nuclear power, nuclear energy come into the fold and representation there. So we think that QQQ really is a good solution as far as a core holding and a diversified portfolio as far as large cap growth is concerned, or even a satellite holding if you're trying to get exposure to some of these companies that are driving innovation. And I think the fundamentals have really supported kind of the mentality around R&D and driving that innovation forward when you've seen significant growth rates on a 10-year CAGR standpoint. Both sales and earnings are significantly higher for QQQ than they are compared to not only the S&P 500, but Russell 1000 growth.
Well, Tim, thank you for your time and support for the event today. That's all the time we have. Thank you.
Thank you, Alexis.